Yeah. Julie Biel, what do you think? Have we re-rated to this new tariff world? I mean, I don't even know how you think about the tariff, since the only certainty we know is the new tariff levels per country, but we don't know what will come in terms of companies actually basically caving or saying that we're going to give you something that you really want, something phenomenal, as President Trump just said, in order for these tariffs to be lifted or at least clawed back a little.
Yeah, I think that's the biggest problem. What I really worry about more than anything is just the level of paralysis that most companies are facing in terms of CapEx investments, which we're already seeing in survey data before the tariffs were announced, and in terms of hiring. And that paralysis, that stillness, it really creates a lot of sluggishness in the economy. And it makes sense to me, right? Because even if Trump came back today and said, JK, no tariffs, was just having fun with y'all, I don't think anyone would be allocating any differently or still feeling much better. It's like if you had a landlord that said, I'm so sorry, but you're going to have to move out in the next 3 months, and then came back to you a week later and said, just kidding, you'd still be looking around for another place to live, right? There's no clarity and certainty that these are really locked in and going to be here for the long term. So I think that's the real problem that we have, is even with the clarity that we have of the tariffs in a little chart, we don't actually have a lot of confidence that we know what the timelines look like. And that makes it impossible to plan.
But Julie, to your point about paralysis, we are in a land here where we're just waiting for that next headline day to day. And so what does the market do? What do you as an investor do in that sort of, let's say it's 8 to 10 months. That seems like a pretty good scenario. Live 8 to 10 months in uncertainty. But what does that do to the markets?
Well, I think we start to really see where the types of businesses that are dependent on trade and are dependent on a specific type of policy to work. Those are just not the types of companies you need to be owning. You're probably better served in the types of businesses that we excel in, like information businesses or software businesses. I think that's probably a better place to be. Or if you're looking at industrials, you want to look at things that are kind of highly specialized and are a little bit more insulated. And there's some in small cap that might be a good place for that. But I think kind of in the interim and larger, bigger picture, what we really have to think about in terms of this policy is, yes, economists told us that globalization would be great for everyone and there would be no deadweight costs. And that's kind of true. But the problem is that assumes that you're going to be able to reskill people. And I think that's the piece that we really missed in this country. And that's why you have this large population that feels very left behind. So I think that there is some support for his policies in terms of we're going to make the other guys pay. The problem is that in all cases, or in most cases, it's actually us who are going to pay these.
If there are cracks, though, in that report tomorrow, Julie, cracks that existed before the tariffs have come into effect, that will really concern investors, I would think.
It should. I mean, right, if 2/3 of your economy is based on the health of the consumer and everyone spends every incremental dollar, or they have been for the last few years, it's really concerning if they start to lose their jobs. And more importantly, it's not just the losing of the jobs that really impacts demand, it's the fear of losing your job. That's when you start to really pull back your spend, even though you are still gainfully employed. And I think it's that confidence piece that's not just lacking in businesses, but if it starts to bleed into consumers as well, that has a meaningful impact on demand, and that happens immediately.
Julie Biel, how are you feeling about tomorrow's jobs report? And do you think we need to price in recession? Are you starting to do that math in terms of S&P earnings, et cetera?
I think that what we are trying to do is look at our portfolio companies and have confidence that even if we do hit a recession, that they're going to be okay. That's how we build our portfolios, and that's why when we have days like today, we tend to do half as bad as the market. The thing that I think is really important for all investors to be looking at is what types of quality businesses do I have? Am I well positioned? Because if we do have a negative jobs report before the tariffs, that is problematic exactly for, as she was saying, the consumer spending aspect of it is so important.